Bitcoin has traditionally had a very high correlation with the NASDAQ in general, kind of risk on assets. That correlation broke a few months ago. Bitcoin has a pretty good correlation with Fed monetary policy. That seems to have broken down lately.
So historically, Bitcoin, and by extension crypto, has followed the 4-year cycle. The prior bull markets and bear markets, 2017, Bitcoin peaked at about 20K. And then throughout 2018, it came down. And then 2021, Bitcoin peaked at 69 and then started coming down. And 2022 was the start of the bear market. And so kind of right on schedule, here we are, 2025, October 10th was the peak at 125, I think it was. And then it started to come down. And so what you kind of have right now, in my view, is this two cohorts battling against each other. Obviously, it's the bulls and the bears, but
right.
You've kind of got this older cohort of Bitcoiners who've had Bitcoin for a long time. They think the 4-year cycle is kind of this like religion, almost like, hey, every 4 years, you're going to have a bear market and it starts in October through December. It's like right on schedule. And so you saw this where a lot of old coins, meaning coins that hadn't moved for a long time, all started moving in October and November. So people are like, oh, the whales are selling. They think the bear market's starting. And there was some prognostications, hey, bear market starting. And so what that kind of did was broke the correlation that you highlighted. It broke global liquidity, monetary policy correlation. It broke the NASDAQ correlation. So that kind of spooked people. And you saw a lot of the selling mostly happen in October and November. Things kind of leveled off in December. I think it's a real question mark now as to, are we going to actually have a bear market now in 2026, just like we had in 2022 and 2018 and 2014 before that? Or are we in a new era, a new paradigm where actually the whales that just decide to dump don't control things? It's actually the institutions, it's BlackRock, it's the long-term accumulators that are going to buy and kind of make this a very shallow bear market.
If we're talking about the stock market, right, we can talk about 7-year cycles in the market, 21-year cycles in the market. And those cycles are very apparent. And those typically revolve around economic growth cycles or recessionary cycles, those type of things. That reflects back ultimately on what drives stock prices ultimately is earnings. And so those cycles tend to relate to each other. I remember that every time we went through one of these concerns about bear markets, kind of the general tenor was, oh, Bitcoin halving event, and that's causing this decline in markets. But at that time, you didn't have a lot of institutional investors in the mix. You didn't have these big accumulators of Bitcoin, these ETFs, et cetera. You didn't have Michael Saylor at the time.
Watch the full interview by clicking on the link below.